Hello, everybody. Hello, and welcome to the very first Impact Investor Conference. There is always, first of all, introduce myself. I'm Paula Garrido. I'm the editor of Impact Investor. And there is always a certain degree of apprehension when you put together an event like this for the first time. You think whether you're going to get the right agenda in place, attract the right speakers, the support from the sponsors, and people in the room on the day. So looking at our agenda, our wonderful lineup of speakers, the support of our sponsors, and also so many of you here in this room, it just gives us a lot of, it's very reassuring for myself, for the team at Impact Investor, and the wider team at FD Business. And so today, first of all, I want to tell you a little bit about Impact Investor. Impact Investor was launched in 2021. The idea was to bring news stories and analysis of the fast-evolving impact investing sector in Europe. We started with a newsletter, a weekly newsletter, and in January this year, we launched our website. We increased the frequency of our newsletters. That's when I joined in January. And since then, we've been growing in terms of scope and in terms of readership. Our focus is on Europe, and when I say that, I mean we focus on investors, investment managers, asset owners that are based in Europe. But of course, when it comes to impact investing, the capital is being deployed globally. So we are European in terms of the origin of the capital, global in terms of how this capital is being deployed. And a lot of it is going to, as you know, emerging markets and developing economies. So we are a very European team. Our main office is here in Amsterdam. I'm Spanish. I'm based in London. Our team is editorial team. We have many nationalities and languages together. So we are trying to cover all the sectors, all the stories that are within the impact investing sector in Europe that are of interest. Our readership is also very diverse. Because of our no affiliation, we are part of the FD Media Group. We do have a lot of readers in the Netherlands, but we also have a lot of readers in the UK, in the Nordic countries, in Germany, France, Spain, all those countries where the interest in impact investing has been growing fast in the last few years. So just the last thing about Impact Investor, if you don't read us, please do go to impactinvestor.com and please subscribe to our newsletter. We only send it twice a week, so it's not very spammy. It's just twice a week, and it's the best way we have to communicate with our readers and also for you to get the latest news and analysis from our team. Today we have a second first. The first was the first conference, but we also have a first impact investing guide that we hope that becomes an annual guide. And there we look at different trends within the impact investing sector. We use data on impact funds provided by Finnish Capital. We have some contribution from some leading figures in the impact investing sector. So if you haven't picked a copy yet, please do. I believe it was today or yesterday inside the FD newspaper. And you can also access a digital version of it on our website. So that's about Impact Investor, about the sector, about the impact investing sector. As you know, the sector has grown hugely in the last decade or so, very much over the last 2 or 3 years. We have a recent report from the GIM on the size of the market, and they estimate that the size of the impact investment market globally is now over $1 trillion. And it is a huge amount, but it's really, really tiny compared to the size of the investment management industry as a whole, and also the size of the problems that impact investing is trying to find solutions to. So we live in a very disrupted world. We are going from one crisis to the next. So that funding gap that we are facing, if we want to meet the Sustainable Development Goals, especially in emerging markets, is becoming bigger. So we need to have more, we need to see more action. But this event and the discussions we're going to have today are not going to be so much about how big is the market, how fast is it growing, can it get bigger, but it's going to be more about, is it growing in the right direction? What do we need in place for the market to scale with integrity, with transparency, with standards, and to make sure that all this capital that is being deployed in increasing amounts is being deployed in a way that maximizes impact. So we are very lucky to have a panel with representing some of the leading organizations that are leading the efforts in this market building exercise globally at the European level and also on a regional level. We are also going to be talking about impact across asset classes, a way not just on private equity, private debt, but also in the wider fixed income sector, and also in listed equities. Can you invest in listed equities for impact? We will discuss that later. We're also going to talk about the very, very important issue of impact measurement and management. It's a key topic in the sector and very essential for the sustainable growth of the sector in the future. And if we have time, we're still going to dedicate some time to talk about impact washing and whether all these product solutions, strategies we are talking about, they have to have the impact label, and how we can avoid some of this impact washing that many people are starting to talk about as it has happened with the ESG sector as well. So I want to say thank you to all the speakers in advance. We have a fantastic lineup of speakers. We almost ended up with an all-female speaker lineup, almost. We have a representative for the male gender joining recently. And even though intentionality is so important when it comes to impact investing, in this case, it wasn't intentional. It just happened naturally. So it can be maybe a sign of the changing phase of the investment management sector, or maybe a particular aspect that is more related to our sector, to impact investing. So I'll let you make your own conclusion on that. And that's it from me. I'm just going to introduce our first speaker, that is Laure Wessemius-Chibrac. She is the Managing Director of the National Advisory Board, the Dutch National Advisory Board on Impact Investing. It is one of the, I believe, 35 national advisory boards that are live under the Global Steering Group of Impact Investing umbrella. And Laure is going to set up the scene. She's going to talk to us about the impact investing ecosystem and also discuss some of the barriers that are there preventing it to develop further. So, Laure, thank you very much. All yours.
So good afternoon, and thank you very much for the invitation to come and present the state of the Dutch impact investing ecosystem. This is based on research that we published earlier this year, so if you don't have it, don't hesitate to have a look on our website later on. Maybe a few words about the NEB. We're an independent non-profit organization. We're created almost 2 years ago. Well, 2 years ago now, just. And basically, we represent some of the leading organizations in impact investing in the Netherlands. We are part of a larger network, as Paula said, the Global Steering Group on Impact Investing, which was a follow-up of the Social Impact Investing Task Force from the G8 in 2013. They basically established the Global Steering Group on Impact Investing, and then in each of the G8 at the time, 7 now, countries was a national advisory board created, and I'm glad to say that Netherlands was very quick by becoming the 33rd country that had a national advisory board. And it originated not from the public sector, unlike many other NABs, but actually from the private sector, which is one of the characteristics of our NAB in the Netherlands. One more word, 35 countries, 1,000 plus practitioners of impact investing all over the world. And I think one of the key features also from our global network is that we're more an alliance of local NABs. But the interesting thing is we can find each other, and about 50% of the countries that are represented in this network are in emerging and developing markets, which is, at least for us at the Dutch NAB, we find that very important when we talk about impact, not only about impact, but with the organizations concerned by impact. Oh yeah, sorry, that went wrong. So that's these are our members today. Thank you very much. On the right side, you see our ecosystem partners. We try to basically work with a lot of other existing networks as well to make sure that we don't duplicate the efforts. And these are the organizations, 21 now, that are a member of our network in the Netherlands. We focus on 3 aspects. One of them, which is probably the most important, is lobby and advocacy for fostering a more blossoming community of impact investing in the Netherlands. We work a lot with the other European NABs as well on legislation, regulation. Then the second aspect is peer learning. There's a lot of innovations happening in the Netherlands as much as internationally. We make sure that we share that we also, for the newcomers in impact, that they can learn from the more experienced impact investors. And then the third one is our catalyzing role, where we have basically working group addressing the barriers I'm going to talk about now on impact. So the title of our research earlier this year was, "Are we punching below our weight?" And I'm going to tell you why we think that we are actually in the Netherlands punching below our weight, because we've got some good news on the sizing, but also some worrying news. Quick mention about how we actually conducting the research. We wanted to understand, what was the ecosystem formed from. What were the different contributions to the SDGs? So what could we reach in terms of scale, but also more granular in terms of the sectors that were served or the type of asset classes. And then the more qualitative part of our research was to investigate what were the main barriers or enablers for the sector to be able to further grow. We had a few challenges. So there's always a risk of double counting when you do some market research. And I think one of the things you mentioned, Paula, is that it's not so much the size of the market that is important, but the trend, where are we going? And that was also very much our point of view. When we started that research, we thought, okay, we can be very precise after the comma, but then we'll probably need 50 people to work on that research. What we wanted to have was a baseline, basically, where are we starting from? And then if we measure with the same methodology over the years, how are we progressing and how are we reaching all of the SDGs? So double counting is a risk. I will explain a little bit later how we manage that. The data is self-reported, so based on what institutions that responded to our survey basically declared to us. So we did not double check everything. It's not an audit. And on the definition of impact, we thought there are some very good standards that exist. I see Wouter in the room from the GIN. So the GIN has basically a very good definition of impact that has the elements of intentionality, measurability, and financial return that our board thought were the best elements. And we thought that will be our base. And we asked the respondents to the survey, can we please also, if you have a different definition, please explain it to us. And on a case-per-case basis, we investigated, okay, does it have all these elements of intentionality and measurability and potentially additionality as well, and return? And we based the selection on that. One more word on the definition. You're probably very familiar in this room with the spectrum of capital. We're definitely in the, what we consider being impact is contributing to solution. So that's the middle range. We're not talking about responsible finance or sustainable finance, and we're also not talking about impact only, which is more philanthropy. So our research, we had 42 responses, which on the one hand is quite a success. If we compare to other market sizings that have been done in Europe, we know that some of our colleagues from other NABs have been struggling to reach to 40. They were like, wow, you reached 40, lucky you. But actually we were a little bit disappointed. We had hoped for about 100 responses, and that was way, way below what we were hoping for. But as you can see, the y-axis gives you the amounts. So the pension funds are obviously the biggest contributors in the market, but with only 3 responses. Fund managers were also the second category. Public investors, when you think public investors, so publicly funded investors. To give you an example, in our members we have Invest International, InvestNL, FMO. So these are, but also some regional provinces funds could respond as well. Insurance company, family offices, charitable trust, NGOs. So maybe one word, 38 were qualified because 4 did not qualify in terms of the definition of impact. So they were taken out of scope. So the results, so the total declared in our survey was 116 billion euros, which is a very big amount, and came to an average of about 10% of the assets under management. But of course we said, these people have obviously a positive bias. So we actually did some additional research and cross-reference with a lot of other sources, and basically came up with a total of a range, because we said as well, we can try to be very precise again, but what's the point? Our point was more to have an idea of the volume. And it's about 150 to 180, representing 4 to 6%. And that 4 to 6%, I would just like to stop for 1 second on that, because you were talking about a little bit over 1 trillion compared to total assets, actually, in the world of about 140 trillion. So basically it's less than 1%. And this is way too small. We need between 4 and 4.5 trillion US dollar per year to achieve the SDGs. So it's basically 4 times that minimum. It's a lot more that we should be investing. And unfortunately, we're not there yet. And in the Netherlands, we're at 4 to 6%. So that's the next one. Of the total. Mind you, the total is also very difficult to find out with different sources. But basically 4 to 6%, it's still much lower than what we should be having to achieve the SDGs. So that's basically the fundamental reason why we think that we're punching below our weight, because we have that enormous potential. We have more than 3 trillion euros of assets under management in the Netherlands, mainly due to the Dutch pension funds, and that are the 3rd in the world, equal with Australia and behind the US and the UK, in terms of total assets under management for pension funds. So a small country like the Netherlands is number 3 in terms of assets under management of the pension funds. And these are long-term investors that, in our view, should be stepping in much more in the sector of impact investing. Maybe very briefly, what was very striking for us was the difference in terms of impact allocation between institutional and non-institutional investors. Obviously, the specialized fund managers, there are many of them in the Netherlands, and quite a few of them will be speaking during the panel today. Obviously, there's a lot more commitment to impact from the specialized fund managers than from the institutionals. And what we would like to achieve as NAB is, of course, a lot more cooperation between these two types of organizations to be able to bring that 7% to a much higher level. Bit of a comparison based on, I have to say that's on the GIN survey of 2020, so it's not the latest one because it had a little bit less granularity than the previous one. But to give you I'm sorry, it's probably horribly small, but basically to give you an indication of who are the main investors. And I think, what's the striking difference is that the DFIs are actually a very big third of all the investments worldwide, whereas in the Netherlands it's only 10%, and it's much more in terms of total assets, the pension funds, even though, it's still a small percentage of their assets. Yeah, and for the rest, I think these are, for me, the most striking differences. Asset classes, there's still a lot of fixed income. Green bonds, sustainable bonds are really the preferred medium. And then private debt, private equity. The red ones are the institutional, the blue ones are the non-institutional. So you see that private equity is, of course, a lot more preferred by non-institutional investors. Again, what's the difference between the Dutch market and the international market? Private debt is a lot more used in the Netherlands than it is globally. I think this is actually the most striking difference between both. And for the rest, a lot more real estate as well, real assets, globally. And then in terms of SDGs, in the Netherlands, we put the top 10. So 13, 8, 3, 7, basically, are in the top. Whereas internationally, again, source GIN, we find 8 again, but we see that the number 1, no poverty, with a lot more financial inclusion, that reflects also the role of the DFIs. And then 3 again, 7 again, and then also 10. Reduced inequalities is also a lot more present internationally. These are the geographic allocations. Unsurprisingly, basically the Netherlands is very present, but also a very big global portfolio, which reflects also a lot of the public investment strategies that are more from the pension funds, the big investors. It's a lot more balanced worldwide. And then the intentions, basically everybody is going to, 13% are going to stay at the same level, and all the rest are going to increase their investments in impact, which has been confirmed, I think, the year after. I'm going to jump on this one and go to the main barriers for the sake of time. So we identified, when we did this research, after the survey, we interviewed almost 20 different organizations, different types of stakeholders, fund managers, government organizations, other networks, and we asked them basically, what do you think are the main barriers? We identified 3, many, but we grouped them in 3. And they were mainly legislative and regulatory, so what's the policy context? The second one were the market hurdles, and the third one was more the mindset of investors. And as you can see, for impact investing, a lot of the policies, current regulations, for example, SFDR, but also AML, KYC, are preventing the market from growing. They are very expensive, sometimes difficult policies to put in place, especially when you want to invest in emerging or developing economies, a lot of the organizations that our investors want to invest in do not have the type of regulations in their own countries or regions that they have to comply with. And it is sometimes a very big barrier. Not that AML and KYC are not important, obviously. We also want to emphasize that it is very important, but the way that all these regulations are put in place should allow for more flexibility and maybe more capacity building of the different countries where we want to invest. In the Netherlands itself, obviously the provision of catalytic capital is also seen as something that is really lacking, especially if you compare to other countries. So de-risking, basically putting wholesale funds together, for example, all the nitrogen funds, energy transition funds, etc., that have been set up by the government in the Netherlands, should have an impact investing lens. That's not something that is very difficult to put in place, and that would certainly help towards a transition to a new economy. Then, in terms of market hurdles, data, that was really what came out a lot. Lack of data sharing, lack of harmonization in terms of norms and standards. Actually, sometimes we have too many different standards. If you think about SFDR, if you think about EU taxonomy, there are so many standards that you actually don't know where to start sometimes. And that's quite complex, especially for the newcomers to address. That's also very expensive, and it requires a lot of additional resources. So this is definitely a limitation for the growth of the market. An additional issue that was mentioned is the lack of pipeline. And actually, that's something, it's more the mismatch between supply and demand of capital. What we've seen is that a number of SDGs are really well invested. For example, SDG 13 is really now really well represented. But a lot of other SDGs, like life on land, life underwater, are really underrepresented. And that's really something that we, as an ecosystem, have to work together on to be able to solve that mismatch between supply and demand of capital. We have to do a lot more business development for the sector, and we have to ensure that there's a graduation process between the early stage, the scale-ups, and the more mature investments as well. And that's one of the biggest issues that we have as well. And then finally, the mindset. The investment culture is still seen as very conservative in the Netherlands, very risk-adverse as well. Sometimes some of the organizations and the people we interviewed mentioned that even though sometimes the regulation actually allows for certain investment to be made, the investment culture especially within boards or decision bodies of more mainstream financial institutions are very conservative. And this is really hampering the growth of the market. And then, of course, in terms of risk-return expectations, we're still very much valuing the financial return, but still not enough the impact. Yeah, recommendations. Basically, a lot of our work is, as the NAB, is to make sure that the government is developing policies that are more conducive to the development of the sector. Improving frameworks, improving legislation, working with other organizations as well to make sure that we have the best possible context for the market to grow. We think that if the respondent to our survey on average had 10% invested in impact, then it means that it's doable. So we think that the rest of the market should have at least 10% invested in impact. So that's basically our target. We want to go from 4 to 6% to 10% in 2025. And we added another point to that, knowing that 70 or more than 70% of SDGs are to be realized in emerging markets. Right now, only 20% of the assets held by Dutch stakeholders are in emerging markets, so we think it should be at least double to 40% to reach more in the direction of these 70% of SDGs. And finally, we want to invite all the stakeholders to join us and collaborate to progress in the market. Thank you.
Wow.